Guys, excuse me. How are we doing? Good morning. This is Saturday. I'm just about to do my weekly review of the markets. All right. For anyone who's new, of course, you're probably all familiar with Forex Factory. I usually get my data during the week from this trading economics. Right. It's 100 times better than Forex Factory. Why? It gives you millions more information that you just do not get on Forex Factory. Number two, excuse me, if you see that there's going to be important news dropping at a certain time, for example, 2:30, the minute the clock strikes 2:30, you will see the numbers on here. If you then jump across and look at the chart, the currency pair will not have moved at that point. If you look at Forex Factory at the same time, it will still be rolling, saying loading. The numbers won't have been released. Pardon me. And in doing so, if you're a news trader, i.e. you trade news moves, you'll be able to get the move. You'll be able to get in the move before it actually moves, right? Before the market actually moves. Excuse me, guys. I live in Jakarta. It's the most polluted city in the bloody world, and it makes me cough like hell. What I'm going to do for the purposes of my weekly reviews, to make it easier on the eye, excuse me, to make it easier on the eye and so we can get through it faster, what I'll do is I'll use Forex Factory for this because you can apply the filters much quicker. All right. So for those of you that are new, what I do is I review every pair individually, except Aussie, China, and New Zealand. Okay, because they're all closely correlated. If China's doing well, Aussie does well, and New Zealand, etc. If China's doing bad, Aussie does bad, and so on. I won't get into the why. It's all taught in the group why that is, but that's just your basic understanding, right? Let's have a look now. So, services index. So anything below 50 is bearish. Okay. Now, people get this wrong and they'll see that it says 40.7 was previous. They look at it now saying, oh, it's went up 44.6. Oh, it's bullish. No, it's not bullish. Anything below 50 is bearish. Okay. Very important. Things are getting better, yes, but it's not bullish, right? It's not bullish until it gets to 50 and above. Trade balance, very poor. China loan rate is the same. 5-year is the same. GDP price index, 5.5. Let's have a look what it's saying here. What were we at previously? Minus up to 0.4, 0.4. So it's growing slightly. Slight increase, right? It's not anything spectacular. Leading index, okay, ignore that. Credit card spending, that's important, is minus 3.8. So people are spending less on credit cards. So when people are spending less money, what does that mean? That means less money is going back into the economy. So the economy is getting worse, right? The economy is getting weaker, which means the currency doesn't have any strength. It means the currency is getting weaker, right? Aussie flash manufacturing PMI, flash services PMI. So every single country in the world has both, okay? They have manufacturing and they have services. Excuse me. However, not every country is predominantly a manufacturing country, and not every country is predominantly a services country. For example, the UK, we do have manufacturing, but we're not a manufacturing country, right? We're predominantly, we provide services, banking services and stuff to the rest of the world. Germany is a manufacturing country. France is a services country. Japan is a manufacturing country, right? Now, although everything I've just mentioned there, we have both, but one of them is more predominant, right? So, for example, in the UK, you would expect to see services above 50. You wouldn't expect to really see manufacturing above 50, and that would be normal. However, right now, manufacturing is above 50. So with both of them being above, that means that's fantastic for the pound, right? But overall, we don't expect to see the pound being over 50 when it comes to manufacturing services PMI, okay? Because we're not really a manufacturing nation, right? It's not our bread and butter, if you like. Here we have Aussie flash manufacturing PMI. Oz is not a manufacturing country. It's services. It provides services for mining services and so on, right? It provides goods. So flash manufacturing PMI is actually increased. However, it's still not bullish, remember, because it's only 48.7. So it means things are getting better, but it's not bullish. However, flash services PMI is increasing, and it is above 50, so that is bullish, right? Which is fantastic. Retail sales quarter on quarter is down for New Zealand. Core retail sales quarter on quarter down again. So what we also do, guys, for those of you that may be new to this, you get your notebook out every week. You write down strong, weak, and neutral, right? Not strong, neutral, and weak. Strong, weak, and then neutral. The reason for that is once we get to the end of all these currency pairs, what you're going to do is cross out the ones that are neutral and just ignore them. The ones that are strong and weak, you're going to trade them against each other. So let's say pound is strong, Japanese yen is weak. You're going to be doing buys on that, right? For example, we wouldn't touch that now because of the circumstances. However, I'm just giving you the insight, right? So then you would join up strong pound to Japanese yen. Okay, we know that we are trading pound against yen. A strong economy with a weak economy. That gives you the trends. That's what creates the trends, either an uptrend or a downtrend, okay? So just to update this, Aussie is still strong for me. New Zealand is still weak, hasn't changed. Excuse me. And of course, China, we don't update China, right? The reason why we look at China here is because it's if I got it here, oh, yeah, I do. Is because if everything's going well for China, like if manufacturing is increasing rapidly for China, it means they're going to import more nickel, tin, coal, iron, more services, more supplies from Australia, in massive abundance, and that then helps the Aussie economy and it goes up, okay? So if China is strong, AUD and New Zealand get strength from that. If China is weak, AUD and NZD get weakness from that, okay? If USD is strong, AUD will become weak. If USD is weak, AUD will become strong. They are, what's the word for it? They're counter each other, right? They're not in alignment. Whereas Chinese yuan renminbi and Aussie are in alignment with each other. Let's have a look at next week to see what news we've got coming up. Excuse me, guys. Aussie CPI year on year. That's good. We want to see that, especially year on years, right? Month on month, they're good to see, but we really want to focus on the year on years, right? And the quarter on quarters. It's predicted, or it's forecasted to be less. So let's see what comes in there. Private capital expenditure, retail sale month on month. China, manufacturing PMI and non-manufacturing PMI. So we want to see that next week, okay? Not a huge amount of news, but there is a couple of bits of news in there that we want to see, all right? So now we move on. And now we just do one currency pair at a time. So we're going to start with the Canadian dollar. Now, the Canadian economy has been super weak for a while. Just remember, the Canadian dollar is very closely pegged to oil. So if oil is doing really well, it gives the Canadian dollar this kind of false strength, okay? So you'd be like, man, the Canadian economy's shit. Why is that going up? That should be a sell, The reason for it is because if you look at oil's probably going up. If oil's going up, it gives strength to the Canadian dollar, even although their economy is dog shit, right? So let's have a look. CPI month on month, slightly up. It was as expected. So nothing really changed there because they expected it to be up at this time of year, okay? Median CPI year on year, it was less. It was even worse than they expected. Trim CPI year on year, it was less. Again, even worse than they expected. So this is a much bigger effect. Common CPI year on year is less, as expected. Core CPI month on month is up slightly. It doesn't say expected or not. NHPI month on month is up. IPPI month on month is up. Remember, these are month on months though. So when it's month on month against year on year, you go with the year on year, right? Because that's the big indicator. But these are still quite important to look at. Core retail sales month on month is up. Retail sales month on month is up slightly, but it's still pretty shit. as expected. Corporate profits a quarter is up. Okay. So we've got kind of mixed data there, right? But the most important data are these, and it's still pretty poor right now. So for me, Canadian dollar, it's looking like things are starting to potentially look up, but it's still weak for me, right? However, we are looking at oil buys right now. So remember, if you plan on selling the Canadian dollar against a stronger currency, you have to be aware that oil is flying up just now, okay? Where are we? Next week. Let's see what we've got. Next week, we've got GDP month on month. So we don't really have any big news next week, all right, for Canadian dollar. CHF, we always know this is a pretty basic pair, but we always have to have a look, right? You can't just ignore it. It's a pretty stable pair, I should say, not basic. CHF trade balance, nothing really to report there. Any news for next week? Nothing. Yeah, there's nothing great for CHF. For me, CHF is still neutral. CHF is one of those ones, right? For me, it's neutral, but it will be strong against certain economies, right? So, like against the Canadian economy, it would definitely be strong, right? So, you'd be looking to, if it was CAD, CHF, you'd be looking to sell that, right? Although I generally don't tend to take any trades based on a neutral pair. I always trade a pair which with a strong economy against a weak economy, right? Because that's when you get the solid trends and the longer moves. I don't want to say the big moves because it's not just like one candle. That's when you get the long, consistent moves, you know, the pullbacks and the melt. That's why, because one economy will be much stronger than the other. And here's an example, right? Here's why that matters. If you are a banker, you work for Morgan Stanley, Goldman Sachs, Merrill Lynch, and you've got a $4 billion account, right? And your goal is to make the company money, right? Do you think that this guy, this trader, who's just about to, trade, I don't know, a $300 million trade, do you think he's drawn a line on his page and saying, right, when this candle breaks that line, I'm going to enter the market at 400 million? Of course he isn't. Of course he fucking isn't. So you have to ask yourself this question. If that's not how the world bankers are trading the markets, by drawing stupid fucking lines on their page and saying, right, if this breaks here, I'm going to enter at 300 million. Right, if they're not doing that, right, and you would agree, yeah, of course they're not going to do that, that's fucking crazy, then you have to ask yourself, why are you doing it? If you've just thought to yourself, just now, that's fucking crazy. Because it is fucking crazy. You wouldn't do that. What you would do is you would run through the news and you would be like, right, okay, Canadian economy is dog shit. Swiss franc is always a stable, solid currency. They don't get involved in wars. That's why they call it the safest Swiss. They provide banking for, multiple huge entities and companies and countries and people, extra high net worth value people. And they're always a safe haven. So they're always stronger. Look, they're always stronger than the likes of Canadian dollar. Where are we? Look, it's at an all-time low, right? You could enter a quick hedge there and make money on a buy. Yes, you could, but why would you? Look, historically, Canadian dollar never beats the Swiss franc. So why would you buy it? You just wouldn't fucking buy it, right? You can't sell it from here because it's at an all-time low. You need to wait till it comes back up and retest these areas of value right here. I mean, to be honest, I'd really be waiting for it to come back up and retest here, up at the 786. If you enter the Fibonacci on here for like a swing to swing, that's probably the 786 right here. Let's try it. I don't know, but just through been doing this for years. Well, it's a 618. There you go, bang on the 618. So you may even get it up here. I would mark that area up. There you go. You may get it coming back up. So for me, on this particular pair, I wouldn't be touching this until it breaks. I mean, it could do this, right? I wouldn't be touching this until it retests here, and then boom, away it goes, right? That's when I'd be getting involved, That's it. So there are times where I'm just not getting involved. If this goes all the way from here to here, I don't care. You don't think, oh, you could have made money from here to here. Stop thinking that way, right? You can say you could have made money from here to here, shoulda, woulda, coulda. But by making money in this way, or trying to make money in this way, you're going against all fundamental data in the fucking planet, right? You're trading a strong economy against a weak economy, which is ridiculous. And sorry, you're trading a strong economy against a weak economy in the opposite fucking direction, right? You're not in line with it. And let's have a look here at CAD CHF. Let's see what banks are doing. Now, you may find that banks will be buying this right now. It's not because of economic data. It's because of areas of value, right? And that's something else that we cover. Areas of value are very important. You may find that banks are in buys right now because it's at an all-time low. Well, there you go. Fuck, they're in sales. So there you go. All banks are in sales right now. And let's have a look at retail traders, right? I bet you retail traders will be in buys because they always do the fucking opposite. Let's wait for this to load up. Come on. There you go. Look, they're all in buys. Look at that. Retail traders like you and I, they're all in buys. Now, think about it this way, right? If every single retail trader in the world, right, had an account large enough that our stop loss on one trade would be $200,000, all retail traders combined in the world do not have enough money in their account to move the market in any fucking way, shape, or form, right? That's fucking important news to you. So, if economically the Canadian dollar is fucked, Swiss franc is good, it's neutral / strong against the weaker economy, right? So in this example, it's strong because it's against a far weaker economy, right? It's solid. And then you look at so fundamentally, it's a sell, right? Then you come and look at platforms like this and you get the data. Now, when you look at this, retail traders are all in buys. You want to be doing the opposite of retail traders because they're always wrong. If you look down here, it tells you 76.9% of all traders lose their money with this provider. So the 77% of the time, retail traders are wrong, right? And if you look at the banks, they're all in sales. They're all in fucking sales. They're not buying it, right? So banks are the people who have enough money to push the market. So why would you enter a buy on this now? Even although you could, because it's in an area of value at an all-time low, you may be able to take the buy from here up to here, which is still, maybe 600 pips, or from here to here. But why would you do it if it goes against fundamental data? And you're going against the people who have enough liquidity and volume of money to make the market move in their favor. Why would you do it? The answer is you wouldn't do it unless you were a fucking maniac, right? And that's just the truth. So, moving on. Let's have a look at Euro. At Euro last week, German PPI month on month is stable. Current account 50.5. So the current account being high and increasing is good. It means that people are borrowing money from their home countries within the Eurozone and they're pumping it back into businesses and services in their own country, which brings the current account up, all right? So that's a good thing. Final core CPI year on year is stable, 2.9. It's still a good number. Final CPI year on year, 2.6, stable, hasn't risen, it hasn't dropped. It's sticky, right? Which means there's no growth, but things are pretty stable, okay? Which is still good, it's still important. When it comes to Euro, we only really care about France and Germany, okay? We do have a look at Spain and Italy if they pop up and it's a year-on-year something. Yes, we have a look at it, but the ones that we really care about that have the power to really move the Eurozone is really just France and Germany, okay? French flash manufacturing PMI. As I said, France is not a manufacturing country, so we don't really expect this to be above 50, but it is dropping, right? It's getting lower, pardon me. French flash services PMI, we do expect to be above 50 because France is a services country, okay? And look, not only is it above 50, it's growing rapidly, so that's fantastic. It's taking a huge jump. That's fantastic for the euro. German flash manufacturing, Germany is a manufacturing country, so we really want to see this above 50, and we don't, right? We can see it's dropping, so it's still bearish. Excuse me, and it's getting worse. Okay. However, Germany is not a services country, and we can see that services is above 50, which is bullish. So you're getting mixed data. This is what you call mixed data, okay? However, overall, with all the other CPI and blah, 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 everything else, the Eurozone is still strong, okay? Flash manufacturing PMI 45.6, so that's bearish. Flash services PMI 53.3 and increasing, so that's bullish, okay? Again, mixed data, but overall, the Eurozone is still pretty strong, okay? So remember to write that in your notebook. Besides strong, we've got AUD and we have got Euro, all right? If an economy is strong, the currency is strong. What have we got next week? Let me just fly through this, lads. GDP quarter on quarter, consumer climate, German prelim CPI. So we want to see that. So this is what I'm talking about. Spanish flash CPI year on year. We want to see that. We don't normally care about things, but when it comes to Spanish year on year stuff and Italy year on year, we do like to see it. Okay, it's good to have that broader picture. Germany prelim CPI month on month. Okay. French final product payrolls, consumer spending. We want to see that if it's going up or down. French prelim CPI, yeah, okay. CPI flash estimate year on year. So we really want to see. There's a fair bit of news next week that we want to see from the euro. Okay, but just for now, euro is strong. Let's see what next week brings. Okay. Moving on. Sorry. Pound. Last week, what do we have? Right move HPI. That's like people getting mortgages. That's decreased. Okay, so that's a negative. Public sector net borrowing has massively decreased, so that's a little bit of a negative. Not super important yet, but it is an indicator. Like, oh, okay, maybe I should keep my eyes on this, right? It doesn't just instantly mean, oh god, the pound's collapsing. No. Flash manufacturing PMI, we expect this to be below 50. Why? Because the UK is not a manufacturing country. It's 52.5 and it's growing. That's just fucking fantastic, right? Because we don't expect it. So that's great. Flash services PMI 53.3. We do expect it to be above 50 because we are a services economy, right? And it is, and it's growing. The pound is continuing to be a fucking powerhouse right now, guys. You know, why anyone would sell GJ, you're a fucking maniac. Unless you're a scalp trader, of course, and you just want to get in and out as it's coming down between price action candles, that's fine, okay? I'm talking about swing traders entering a trade and holding it for the next 3, 4, 5 weeks, right? That's what I'm saying. You're a fucking maniac. If you're a scalp trader and you're going to enter a sell on something like GJ or UJ, that's absolutely fine because you're going to base it on price action, right? So it's important for me to remember and give you the context of what I'm saying there. CBI industrial orders expectations down, but it was higher than expected. Okay, let's see what we've got next week. Short price index, we want to see that. CBI realized sales. Nationwide HPI, we want to have a look at that and see if that's still going down or if it comes back up. Mortgage approvals, we want to see if that goes up or down because if people are getting more mortgages, it means the banks are lending more money. It means that people are using that money to buy houses. Where do you buy a house from? Companies, right? Fucking building companies. And then money's going back into the system, back into the employees, and so on and so forth. Okay. So we want to see that for next week. Nothing major, but it's okay news that we'd like to see. And for me, pound is still strong. Okay. Moving on. Let's try and keep this below 35 minutes. Japanese yen. SPI, sorry, I want to say last week first. Core machinery orders are increasing. So they've taken a big jump, right? Which it doesn't mean instantly, right, Japan's now a strong currency. Not yet. Things are getting better. You need to really wait and see it play out, between this month and next month to see it. Is it real strength or is it strength just because they've manipulated the market with selling bonds and blah, 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 right? So we want to see that. Flash manufacturing PMI is still bearish. It's getting slightly better, worse than forecast, but it's slightly better than previous. So it's still bearish. It's still shit. Japan is a massive manufacturing country, right? They just haven't been able to really get out of this hole since COVID. National core CPI year on year is growing slightly, but as expected. Yeah, Japanese yen still poor for me. Next week, core Tokyo CPI, we've got that. Yeah, we want to see this. BOG core CPI. Yeah, we've got a lot of news that we want to see next week. Retail sales year on year, housing starts. Yep. Unemployment rate, very important. Okay, so for me, Japanese yen is still weak, guys. There's a couple of bits of news which is saying, okay, maybe things are starting to get stronger, but overall, it's still the currency is still dog shit, right? You would not be buying the yen. Hey, let's have a look. This week, what we're on USD. Okay, give me 2 seconds, guys, just to scan through this. Unemployment claims have increased as expected, but they've increased, which is not a good thing, right? Even if they are as expected. Flash manufacturing PMI is down. Not so important as we always expect it to be down because the US is not a manufacturing country. It's predominantly a services country. If we look at services, it's actually growing, which is fantastic, right? Existing home sales, see what that's increased. That's great. Let's have a look. Fitcher speaks. So when Chair Powell spoke, I believe he was saying, obviously, with the data that's coming out now, they may be looking at rate cuts in September, which is to be expected now, right? However, it doesn't mean rate cuts are going to happen, but they have been quite positive in, okay, probably going to be September for rate cuts. So we have to bear that in mind. However, we also have to bear in mind that they also say if the numbers support it, right? If these numbers are coming down gradually on their own and it supports a rate cut, yes, but if we come on this next 2 weeks and 3 weeks and all the numbers are flying up again, they probably won't cut rates, right? You don't want to cut rates into an increase. You want to cut rates as things are coming down by themselves, right? If you cut too soon, things will just fly and inflation will get out of hand, okay? Let's have a look. Next week. Loads of important news next week. Core durable orders, blah, 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 blah. Consumer confidence, that's important. Crude oil inventories, we want to see that because we're in oil, right? We're in an oil trade right now. Prelim GDP, quarter on quarter. Unemployment claims, important. Core PCE, yep. Personal spending, month on month. Personal income, these are important. Because if people's income is up, they're getting more money, right? What do people do when they get more money? They buy more shit, right? So these are all important for next week. So for me, USD is still, in my opinion, is still strong. It's still, the strongest economy out there right now. Okay, and that is it, lads. So as a roundup, I will run through and summarize my pairs. So strong category: AUD, Euro, Pound, USD. All right. Weak: NZD, CAD, Japanese yen. Neutral: Swiss franc, CHF. Okay. Now we jump across and we just simply look for areas to trade from. Okay, I'm going to start from the top. I don't even trade that pair. That was just an example I was giving you. Let's start from the top and we'll work our way through. So, there we go. So, yeah, we're still looking at this. Let me just put, there we go, put that in there. So what we look for in technicals, guys, to mark up our areas, obviously we look for it to come back and retest the areas of the 786 is really what I like. Look, you can see this one played out from here. It's just done a liquidity grab, but it still went, right? So what we look for, and it's dead fucking simple, right, for your entry. You look for around about 786. It's probably around about this area anyway. And you look for, I'll move this out of the way. That's going to annoy me. You look for a smaller candle being engulfed by a larger candle, right? And that would potentially be your entry. You'd mark it up. Let's just see out of curiosity where it is on here. Is that 786? Oh, there we go. Look, it's bang on the 786, and you mark up this white candle. So this area here is your area. Ah, shit. Is your area of entry, right? This is where I'd be looking to enter the market for potential sales, right? If you were going to do that. That's just an example. I'm not looking to sell this pair. I'm just showing you. Let's see what we've got. So AUD, NZD, or AUD, CAD. We'd be looking to buy that. However, we can't, based on fundamentals and economics, we'd be looking to buy it. But you can see it's really dog shit. So the only time that I would really be looking to buy this, right, is when it finally breaks above here, comes back for the retest and goes. And that would be my entry. All right. Let me just change the color of that. That would be my entry right there. So you'd really be looking to buy this. I wouldn't be looking to sell it. AUD CHF. AUD is strong. So yeah, you could buy this. There you go. It lines up. Look. Anyone that's watched my previous markups, look, it's fucking bang on there. All-time low. In you go, and away it goes. You could take this up. Let's have a look at the daily. See if there's any. Give me a second, lads. Still, I would, for me personally, what I would do is I would wait for this to break up, pull away, come back down. Here's your supply and demand. What I would personally be doing, right, is I would let this play out. It's probably going to come up, boom, shoot away, come back up, boom, 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 bang, bang. Reject here, down you come, bang, 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 bang. Enter. I would then enter here at the rejection, and then away it goes, right? That's how I would approach this. This would be my entry when it comes back and retest this. Anything this market does outside of this box right here, I do not give a flying fuck. I don't touch it, right? That would be your entry, okay? So I'm going to write this down so I can give it to my lads after this. CHF. I'm going to put buys and sells, just so I can just put that there. So at the end of it, I remember which marked up charts I've got, okay? So I can give it to my guys in my Discord group. Nothing here. Move on. AUD USD, I wouldn't trade it. Why? Because both of them are strong. Now, both of them are strong. That's why you're getting this range. This is just a big giant range, right? Yes, you can trade ranges. Look, you can see we marked this up previously and it's hit, boom, and away it went. If it breaks past here, it's probably going to touch this top zone, or it may retest up here. If the market comes to here, there may be times, guys, where, AUD is strong and USD is weak. So you'd be like, okay, it's a buy. However, that's when value comes into it, right? And you could enter a sell here. I hate to explain this to people that are new because I don't want to confuse you. But areas of value are extremely important in the market. So even if it goes against economics and fundamentals, yes, you could sell if it rejects here, and take it back down to here or take it back down to here, right? Because it's an area of value to sell from. You would never buy from here unless it broke above, came back down, retest, reject, and then went. Okay, that's a lesson for another day. But I wouldn't be looking to trade this, so I'm going to turn that off because both pairs, both economies, in my opinion, are strong, okay? And you can't really have that because they go in opposites from each other. When USD is strong, AUD is weak. When AUD is strong, when USD is weak, AUD is strong. Ouch, the liquidity grab. For this, let me have a look. I mean, look, we already marked this up. You could trade that. I mean, I've missed it now. I wouldn't trade it. Euro, both of them. Why I wouldn't trade it? Both of them are strong. Look, this is just a big, massive range. I don't trade ranges. I trade trends, right? An uptrend or a downtrend. I don't trade ranges, guys. Can you trade ranges? Yes, you absolutely can if that's your thing. There's really nothing wrong with trading ranges, okay? I just don't do it. That's all it is. It's just a personal choice, right? Dog shit. I'm not even going to look at that. That's absolutely wank. Euro CAD, that would be buys. You wouldn't be buying it until it really broke above, came back down, and away it goes. That would be your entry. All right? That would be your entry. You can sell from here because it's in an area of value to sell from, right? Over and above fundamentals. I don't really like covering this with any new people that might be watching this on YouTube because it's a whole fucking lesson on its own, right? Value and fundamentals and blah, blah, blah. Let's have a quick look and see what the banks are doing. Let's see what they're doing. Euro CAD, is it? This platform that I'm using is called Prime Market Terminal. If you're watching this on Facebook, the link will probably be above. If you're watching it on YouTube, the link will be below in the description. If you want to purchase this, it's phenomenal. Don't look at the whole screen and shit your pants, all right? You don't need to use all of it. You don't really need to understand all of it. You only need to use a couple of these things, and it's very important. So look, all the large institutions around the world, they're at stalemate. They're 50-50. So I wouldn't touch this, right? Like I just said. Let's see what retailers are doing. They're probably in sales. There you go. They're in fucking sales. Do you know what I mean? So the banks are at stalemate just now, so I just wouldn't touch it. And it's just because things are so unclear. Look, this is why banks are 50-50. They need to see more data, right? So if you're wondering what this is, COT means commitment of traders. So every single Wednesday, every single week, all these massive institutions, all the banks, JP Morgan, Wells Fargo, all the major corporations around the world, pardon me, they must, by law, submit all the trades that they're in. That then gets reviewed to see if that's correct or not. And then every Friday, it gets posted for the world to see. And obviously, platforms like this combine it for you so you can see it, right? So you can see what are all the banks doing. You want to be in line with the banks, right? You don't want to be doing the opposite of the banks. You want to be in line with the banks and doing the opposite of retail traders, okay? It's just a little nicety. It's a very useful piece of kit. Euro CHF. So that's a hard one because Euro is strong, but CHF is just such a solid economy. It's one of the world's safe havens, and as you can see, look, it's just not smart to. Could you buy it? Yes, because it's at an all-time low. So you could buy it and do it. You could hedge it, right, and buy it from here and take it back up to here. You could. Would I? No. I would just simply wait until it comes back up and retest here. I don't give a shit about not making money from here to here. I don't give a shit. I just fucking wait like a sniper until this fucking thing gets back up here. Then I enter and take it for the sale. Okay? Just because you can trade something doesn't mean you fucking have to, right? That is absolutely dog shit, so I'm not even going to bother wasting your time fucking looking at that. That again is dog shit. We'll be interested to see what happens here. Both are strong, so I wouldn't trade them. From an area of value, you could sell it from here, yes, but you've got resistance right here. You've got tons of resistance. I just wouldn't do it. I would only buy it if it broke above here, retest, reject, and went. Yeah, I'm going to take that off because it's not a pair. I'm going to take that off as well. It's not a pair that I give a shit about trading because both of them are strong right now. Remember, you want to trade a strong against the weak. You don't want to trade weak against weak, strong against strong. Absolutely not. Euro Japanese yen. Excuse me. Euro Japanese yen, absolutely. It's a fucking buy all day long. You would never sell this fucking thing. But for right now, I would just hold fire, right? You want a bit more clear. You can see it's hit. Look, if you go back and watch my old videos from 2, 3, 4 weeks ago, you'll see that I already put these in here. I explained why this was my area and why you'd be looking to enter here, right? You're just really looking for a pullback now to see what it does here and then go again, okay? For now, it's a buy. However, you just wouldn't be buying it right now, okay? So just hold on to your fucking seats. Euro NZD. Now, this is a great example. That's a buy all day long. So why is it fucking going down? Because you had some decent strength news last week from NZD, gave it a little bit of strength, and also it's in a massive area of value. It's an all-time high. So it's a fantastic area of value to sell from. Okay. Excuse me. I hope this isn't confusing you, but fucking fundamentally, I know it's a tricky one. That's why nothing is black and white in trading, okay? You need to understand the whole fucking context of it. So, can you sell from here? Yes, you absolutely can, because it's a great area of value to sell from. Hence why I even fucking marked it up. However, I would not be touching it. I would only be looking for buys when it comes back down and retest this area here. I'd be looking to buy it and crack on, or even if it pulls down here, but most likely it'll be this area here. Comes down, retest, rejects, and goes, right? So I'm not looking to sell it. GBP AUD, both are strong, so I don't give a shit. I'm going to turn them off. Again, area of value. Look. Pound CAD. Excuse me, guys. It's buys all day long. However, you would never buy it from here in a million fucking years, okay? You need to wait for it to come back down and really retest this area, okay? I've marked this up because I was doing a different lesson. It can be a sell from here, right? It's not going to go fucking down there, that's for sure. It can be a sell because it's an area of value to sell from, okay? But really, the best trades that you're looking for here is either the buy here, right? Where that's your entry, okay? Or boom, here, 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 reject, enter, away you go, right? That's your entry down here or down here, okay? That's really the trades that you're looking for here. Fucking hell, excuse me, lads. GBP CHF, area of value to buy from. Hence, we already marked it up. Not trading it, I'd really like to see it come back up. Look, it's just a big, massive range here, right? See that? It's a big, massive range. I don't want to fucking trade it. Shit. GJ, it's 1,000,000% buy. I mean, it may come up here. I'm not going to buy it just now. It has to come back to an area of value. So down here, I would buy it. Down here, I would buy it. Okay, it's probably going to come up. Reject here. We've got other news. Boom, 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 boom. Retest, reject again, and away it goes. Right. So this area and this area are two areas that I'd be looking to buy it from. Okay, so it's not quite ready for a trade yet. Pound NZD. It's a counter trend trade. We actually did take this trade, even though it goes against fundamentals. Excuse me. It's an all-time high and a great area of value to sell from, okay? So we did take that trade. I'm now out of it. Fuck's sake, sorry, lads. I'm now out of it. However, it's not a trade that I like to take because it goes against everything, right? I really prefer to wait for either to break above here, retest and go, or come down here, retest, bang, 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 right? That's the real fucking trade. Or better still, if it comes down and retest this, even better. All right. Change it to green. GBP USD. We are look. So you, both are strong. So you're potentially going to get a range. It may just come here and start ranging. You may get this right. If pound is kind of stronger than USD just now, so you may get this right. I just wouldn't trade it. I just wouldn't touch it. You may get it breaks above and blah, blah, blah. If it came back down and retested here, I would absolutely buy it from here. But that's it. Other than that, I wouldn't be doing fuck all. I wouldn't be touching it. Let's see what we've got here. Sorry, that is incorrect. So it's now broken this previous resistance. So you're going to mark up this here. That smaller candle with that large engulfing candle, right? Let's see what it does in this zone. It's probably, is that 786 or 618? Let's have a look. There we go. It's bang. It's coming into the 786, right? So that, if that comes in here, what pair are we on? NZD USD. What you'll normally find is this will come in here. and there will be massive news, positive news from the USD, and that will then fucking melt. Okay, so I'm definitely looking at that for a potential trade this week. Let me just move that up. Okay. NZD USD buys. Sells. NZD USD. That is it. I want to be selling that. NZD CAD. Well, both of them are dog shit, right? That's why. Look, if you look at this, it's just flat, right? It's just fucking flat. If I put this down here, look, it's just ranging, right? It's just a big fucking range, so I wouldn't touch it. Yes, you could sell it from here, or you could sell it from here, absolutely, because it's an area of value to sell from. But I'm just not interested. What you also need to take into consideration is that we are now in oil buys, right? The Canadian dollar gets strength from oil buys. So when this comes up here and rejects, that you probably could see that this is probably going to start melting down here, which you may be able to enter it. I don't think I'm going to trade it, but I'm going to mark it up with red so that I can check it later. It's really just for being a nosy bastard, right? And seeing how it turns out. I don't really care to trade it. NZD I ain't touching it. It's absolutely fucking dog shit. Okay. Oil, USD CAD, don't care. Let's see. Look, areas of value. So it's just ranging, right? Look at how many times it's rejected this area of value. Look at how many times it's rejected this area of value. Okay. So what you may find here is it'll go like this: bash, bash, reject, and melt. So if you wanted to, you could enter a sell here. You could. I wouldn't bother, but you could if you wanted to. USD Japanese yen is buys. Wait and see what it does when it gets to this zone here. Okay, that's fine. So if it rejects in here, then I would buy it. So I'm going to put an alert. I'm going to put the alert in here. Deep retest. USD CHF. Yeah, USD CHF. Yeah, I ain't. Well, you could buy it. Let me see. It could, if USD news comes in strong, that could be a decent buy because it's in a fantastic area of value. So yeah, I'm going to put my alert right there. So what have we got here? NZD USD buys USD JPY. What's this? USD CHF. Okay, so I've got 1, 2, 3. I've got 4 that I'm potentially looking at next week. Oil, we are currently in oil. Beautiful fucking entry. And we are waiting for it to come up. Round about this area. I've got my take profit set up here, actually. But, of course, I will be monitoring it here for TP1, here for TP2, and so on. But we're currently in this, and it's flying, all right? Gold, I ain't touching gold just now. Silver, look, you can see right here. See this small candle with the large engulfing? I'm just waiting for silver to come back round, boom, boom. Retest, reject this area, and then crack on, okay? I'll change that to green. Let me set an alert. I'm going to put the alert here, okay? And silver buys. Just going to write silver. Okay, so I've got 1, 2, 3, 4 pairs that I'm looking to potentially buy this week. Potentially, right? That's AUD CHF, USD Japanese yen, USD CHF, and silver. Doesn't mean I'm going to buy it. It just means that's what I'm eyeing up, right? I need to see how it fucking plays out. It sells NZD USD, all right? And as I said, we're currently in oil. So that's it for the week, guys. If you want to learn trading, we offer a full month, absolutely free, to our premium Discord group. I'll show you it right now. Look, we've got this group. I'm even on a live trading session right now, so anyone in our group can watch this live. They can ask me questions. They can run through it. Trade results. Look, this is the results from our members. He's obviously got a small account, Jevons. He's just starting out. He's made $1,900 in one day copying our trades. That's Ian. Alex is up 142. Jevons again. Big Dan is up 735. Big Dan again. He's up 2,300. Dan again. 3. Well, you get the point, right? This is all of our students. All right. What's this? Yeah, there we go. You can see it for yourself, right? If you want to join us, come and join us. Like I said, we give you a full month absolutely free. Whenever I take trades, I do all of my trading live in front of your face. So I open up my screen like this and I trade all my accounts live right in front of your face. We also give all of the signals to the trades that we take so you can copy our exact trades. We've got full education videos up here, newbie videos, beginner videos, swing trade education, and we offer daily mentorship. We offer one-to-ones if you want to do one-to-ones with us. We do that as well. We do not charge any extra for it. Like I said, your first month is absolutely free, so you can see if we're bullshitters or if we actually know what we're talking about before you decide to subscribe. If you decide to subscribe, it's only £97 a month. You can fucking make that back in a day by simply copying our trades. All right, guys. Trading is not a get rich quick scheme. Don't sit here, look at all the traders' fucking results and be like, oh my god, I'm going to put $1,000 in and fucking turn it into 10 grand in 2 weeks. No, that's not how trading fucking works, guys. Don't get fooled by all that bullshit that's online. You need patience, right? Especially if you have a tiny fucking account. Tiny is anything under 10 grand, right? I mean, even 10 grand's fucking tiny, to be honest. However, it's obviously a good start, right? There's nothing wrong with starting trading with $1,000, $2,000, whatever. But you have to remember, it's a process, right? And you want to slowly build up your account, let it compound and get bigger, and you can grow your account pretty rapidly, okay, over the course of a year or 2 years, okay? But consistency overall, don't be fucking greedy and think, oh, how much money can I make? It's about consistency, right? Yeah, if you want to join us, if you're watching this on Facebook, the links to our Discord and Prime Market Terminal, if you want to get that, will be above on Facebook, down below in the description on YouTube. All right. See you in the charts next week. Let's have a great week.